Hey everyone, welcome back to Corporate Decoder, the place where we uncover the hidden stories behind CFO's nightmares and boardroom victories. Today we are diving into a report from Senmiao Technology Limited, an interesting company that seems to be making some rather significant changes. We will be dissecting their latest filing to understand exactly what is going on. If you enjoy getting straight and simple insights from these complex corporate documents, make sure you hit that subscribe button. And hey, we have a fantastic community on Discord already discussing these kinds of filings. Link is in the description below if you want to join the conversation. Alright, let us jump right into this filing. What we have here is a Form 8K, which essentially means the company is reporting a major event that shareholders need to know about right away. Usually these are big deals like mergers, bankruptcies, or significant management changes. The date of the earliest event reported here is the 31st of December 2025. This tells us when the key action they are reporting took place. The company in question is Senmiao Technology Limited. Now, something interesting right off the bat, they have common stock listed and traded on the Nasdaq Stock Market LLC under the ticker AH for those keeping score at home. That is the Nasdaq, a pretty big deal for any company. The first major item they are reporting is about entering into a material definitive agreement. In plain English, this means they signed a very important contract that will likely have a big impact on the company. So what is this agreement about? It turns out the company has two subsidiaries, Yicheng and Jekang. These entities were focused on automobile transaction-related services, specifically within the online ride-hailing industry in Chengdu, China. The report mentions that due to tough competition in this sector, these subsidiaries had accumulated quite a loss, about $11 million as of the 30th of September 2025. Even more telling, they had no operations during the past fiscal year. It seems management looked at this situation and decided the best course of action was to get rid of these struggling parts of the business. And that brings us to the actual deal. On the 31st of December 2025, Senmiao Technology Limited entered into an acquisition agreement with a company called Humao Sheng Tang Holdings Limited, or MST for short. This buyer is not affiliated with Senmiao. Under this agreement, Senmiao is selling 100% of the equity interests in both Yicheng and Jekang to MST. And here is a really key point. The price for this sale is no additional consideration. What does no additional consideration mean? It means they are not getting any money for these subsidiaries. They are essentially giving them away. This is a pretty strong statement about how bad things were with these particular business units. The report tries to cushion this blow by stating that the board approved this deal after getting advice from an independent valuation firm. This firm apparently concluded that selling these businesses for nothing was consistent with their fair market value. This is a common way for companies to justify giving away assets. But it does not change the fact that they are essentially writing off these losses and a whole part of their business. This next section confirms the completion of that disposition, basically saying the deal is done. All the details about the agreement are hereby incorporated by reference. Now moving on to another significant event. This section details the departure of a key executive. Effective the 31st of December 2025, Ms. Xiaoyan Zhang has resigned from her positions as Chief Financial Officer and Treasurer. The report clarifies that her resignation was not due to any disagreements with the company regarding its accounting, operations, policies, or practices. The company states that the board is actively looking for replacements. This is a pretty big deal. When a CFO leaves, especially around the time of a major asset disposition, like the one we just discussed, it can raise questions about the company's financial strategy and stability. They assure us they are working to ensure compliance with Nasdaq listing rules and other regulations, which is good to hear. And finally, the report lists the exhibits. These are the supporting documents for everything they have reported. We see the unofficial translation of the acquisition agreement for the sale of those subsidiaries. There is also a pro forma balance sheet. Pro forma means that the financial statements have been adjusted to reflect the impact of the disposition. Essentially, it shows what the company's financial picture looks like after giving away those subsidiaries. This really is the best place to understand the financial impact of what we have just discussed. But unfortunately, the actual pro forma financials are not detailed within this text. The report is signed by Ronggang Jonathan Zhang, the Chief Executive Officer, dated the 7th of January 2026. This is about a week after the main event they are reporting, which is typical for these filings. So let us look at the big picture here. Senmiao Technology Limited appears to be undergoing a significant restructuring. They are shedding two subsidiaries that were losing money and facing tough competition. This is often a necessary but difficult step for businesses trying to turn things around. The fact that they are selling these assets for $0 indicates a deep-seated problem with those specific operations. The departure of the CFO right around the same time is also noteworthy. While the company states it was not due to any disputes, it does add another layer of uncertainty to the financial leadership at a critical juncture. What does this all mean for Senmiao Technology Limited going forward? On one hand, getting rid of money. Losing operations is a positive step towards financial health. It allows the company to focus its resources on more promising areas. However, the lack of any return on the sale of these subsidiaries and the departure of the CFO suggest there might be underlying challenges that are not fully detailed in this report. We will need to watch future filings to see how the company repositions itself, and if it can find new avenues for growth. The key risk here is whether the remaining business is strong enough to compensate for the losses from the disposed assets, and whether the company can attract and retain strong financial leadership. Alright, that is our breakdown of Senmiao Technology Limited's latest filing. What is your take on these developments? Do you think shedding these subsidiaries is a smart move or a sign of deeper trouble? Let us know what you think in the comments below. If you found this analysis helpful, please give this video a thumbs up and subscribe for more corporate deep dives. And don't forget to join our Discord community linked in the description to keep the conversation going. Thanks for watching, and we will see you in the next one.